how does a completely chaotic 72-hour window of mixed geopolitical signals instantly wipe like 10% off the price of global oil?
Yeah, it's pretty staggering.
It really is. I mean, it's a scenario that totally defies the logic of how we expect massive global markets to operate. So, welcome to the Deep Dive. We're taking you through one of the most complex geopolitical and economic events of recent times.
Right.
And we're pulling everything today from a single, deeply researched source. It's a comprehensive March 24, 2026 report from the Global Review, and it's authored by Fareed Novan.
Which is honestly a critical document because it really forces us to look at the raw mechanics of global power, rather than just reacting to the daily noise.
Exactly. And that is exactly our mission for you on this deep dive. We're looking past the, flashing red headlines of the Israeli-Iran war.
Right, the stuff that grabs all the attention.
Yeah, and instead we are going to decode those extreme market reactions, understand the actual physical reality on the ground in the Strait of Hormuz, and uncover how China is quietly emerging as the strategic winner in all of this.
It's a lot to cover.
It is. Okay, let's unpack this, starting with the timeline, because the immediate catalyst for this entire analysis is a dizzying 72-hour whiplash of mixed signals from the U.S. and Iran.
Yeah, you really have to look at this on an hour-by-hour basis to understand the shock to the system.
Right.
So on March 21, the U.S. makes public statements referencing a, quote, winding down of hostilities.
Which sounds great, right?
Exactly. In diplomatic terms, that is a clear signal of de-escalation. But then, less than 24 hours later, so on March 22, the U.S. completely reverses course.
Like a total 180.
A total 180. They issue a severe, coercive 48-hour ultimatum, and the threat is highly specific. They say the U.S. will obliterate Iranian power and energy facilities if Tehran doesn't immediately restore maritime transit through the Strait of Hormuz.
So within a single day, the posture swings from winding down to, we will systematically dismantle your infrastructure.
Right.
And then it flips a third time.
Yeah, this is where it gets crazy.
On March 23, just hours before that 48-hour obliteration deadline is set to expire, President Trump announces that there have been very good and productive conversations with Iran.
Right.
And he postpones the planned strikes for 5 days, making it contingent on ongoing meetings.
And, that alone would be enough to cause whiplash, but the immediate Iranian response throws the entire situation into absolute chaos.
Oh, yeah.
Because following the U.S. announcement of a pause, Iranian officials issue a total denial.
A total denial.
Right. The Speaker of the Iranian parliament publicly states the U.S. announcement is fabricated. He claims it's just a stunt designed purely for market manipulation.
Wow.
And then the Iranian Foreign Ministry backs that up. They frame the U.S. pause as this desperate attempt to lower global energy prices while still, preserving the military option for later.
So it's completely contradictory. You have one side claiming productive talks and the other side claiming the talks don't even exist.
Exactly. And what's fascinating here is how the analysis categorizes this exact sequence: the threat, the pause, and the denial.
What do they call it?
It's identified as high-frequency strategic signaling with low commitment credibility.
That's a mouthful.
It is, but it makes sense when you break it down. When a massive threat like an obliteration ultimatum is issued and then pulled back right before the deadline, and the opposing side outright denies any concessions were made, it severely erodes the credibility of the actor issuing the threat.
Right.
So repeated cycles of this push all subsequent communications into what they call a cheap talk equilibrium.
A cheap talk equilibrium.
Yeah.
It's like a high-stakes poker game where one player triumphantly shows their cards to call a truce, and the other player looks at the table and says, "We aren't even playing poker."
Yes, exactly.
And when that happens over and over, the chips lose their value. The actual words being spoken lose their informational weight.
That captures the dynamic perfectly. The market realizes the rhetoric is completely unreliable. So it stops listening to the press conferences and starts desperately trying to read the underlying behavioral signals.
Which explains the financial reaction.
Right.
Because the data from the trading floors tells a story that seems completely disconnected from the political rhetoric we were just talking about.
Completely disconnected.
Because within minutes of the U.S. announcing that 5-day pause, Brent crude oil dropped below the massive psychological barrier of $100 a barrel, landing at $99.94.
Yep.
And U.S. crude, WTI, dropped to $88.13. I mean, that is a massive 10 to 11% intraday plunge.
It's huge. And the ripple effect was immediate. U.S. natural gas contracts fell 6%, European gas fell 9%.
Wow.
And the S&P 500 surged, posting its strongest session since the hostilities began. We also saw Treasury yields retreat and the U.S. dollar weaken.
Right.
The analysis identifies this sweeping cross-asset movement as a macro financial regime shift signal.
Okay, I want to pause on that term, a macro financial regime shift signal. What does that actually mean for the global economy? Because it sounds like a lot more than just a good day on Wall Street.
It is. A regime shift implies a fundamental rewiring of how risk is calculated across the entire financial system.
Right.
So normally, asset classes like oil, stocks, and bonds, they move somewhat independently based on their own microfactors. But in a regime shift, the fundamental gravitational pull changes.
Like everything shifts at once.
Exactly. Every algorithm, every pension fund, every institutional trader simultaneously reevaluates their baseline assumptions about global risk.
And the most crucial detail here is the timing, right? Because this massive coordinated market repricing happened before Iranian officials publicly denied the existence of the negotiations.
Right. The markets were reacting entirely to the U.S. pausing the strike.
But wait, if crude prices are still 30% above pre-war levels and Iran is denying the peace talks, why were traders popping champagne? Are markets just inherently overly optimistic?
That is the natural assumption, right? But it's an analytical trap.
How so?
Traders didn't think peace was at hand. They aren't that naive. What the market was doing, acting as what the author calls Bayesian decoders, was engaging in tail risk compression.
Okay, let's break down the mechanics of tail risk compression.
Yeah.
Because it sounds complicated. How does that actually work in practice?
Well, picture all the possible outcomes of this war plotted on a bell curve.
Okay, I've got a bell curve in my head.
The fat middle of that curve, the most mathematically likely scenario, is a persistent grinding conflict. Now look at the extreme right edge of the curve, the tail.
The worst case scenario.
Exactly. That represents the immediate U.S. obliteration of Iranian energy infrastructure, which would trigger an unprecedented, catastrophic global supply shock.
All right.
By pausing the strike, the U.S. essentially took a pair of scissors and popped that extreme tail off the curve.
At least for a 5-day window.
Right, just for that window. So the market wasn't pricing in world peace, It was merely pricing out the immediate apocalypse. The baseline expectation of a grinding war remained completely intact.
That makes a lot of sense. The apocalypse premium evaporated, even if the standard war premium stayed baked into the price.
Exactly.
But if peace isn't actually on the table, why did the U.S. hit the pause button in the first place? If it wasn't a real diplomatic breakthrough, what was it?
To answer that, we have to shift our focus from international diplomacy to hard domestic economic constraints.
Okay.
Throughout March, U.S. gasoline prices had been rising sharply. They had reached a threshold that causes tangible consumer distress.
And people hate that.
They do. And historically, consumer distress at the gas pump severely threatens presidential approval ratings. So domestic economic stress imposes binding constraints on foreign policy.
And the analysis gives a very specific label to the Trump administration's strategic profile in this moment, classifying them as primacy assertive under market-sensitive constraints.
Right. Primacy assertive basically means a willingness to escalate, absorb costs, and pursue strategic dominance to maintain global primacy.
But the market-sensitive constraints part?
That's the leash. The administration will only escalate up to the point where domestic economic pain, specifically surging gas prices and falling equity markets, becomes too politically costly.
Right.
Once that threshold is breached, they are forced to de-escalate, regardless of what's happening militarily.
Here's where it gets really interesting. Because the diplomatic pause to cool down the oil markets was only half of the story on March 24th, right?
Yeah, this is the kicker.
Because at the exact same time the U.S. was broadcasting a delay to calm the markets, the Pentagon quietly went to Congress to request a $200 billion supplemental appropriation, specifically for Iran-related operations.
Yeah, and that $200 billion figure is what strategists call a hard signal.
Because you don't ask for that kind of money for nothing.
Exactly. You do not ask Congress for $200 billion for a weekend skirmish. That magnitude of funding reveals internal military assumptions about sustained sortie rates, massive munition expenditures, and long-term logistical sustainment.
It's like hitting the pause button on your stereo so the neighbors don't complain, while quietly going out to buy a $200 billion amplifier.
That is a great way to put it.
They aren't winding down at all. They're preparing for a campaign measured in months, not days.
Right. And this is where we have to look at how analysts use a Bayesian framework to calculate the actual trajectory of the war.
So how does that work?
Well, a Bayesian update is a mathematical way of revising the probability of an event as new evidence arrives.
Okay.
But crucially, a Bayesian model doesn't weigh all evidence equally. It assigns a heavy weight to actions that are costly to fake and a low weight to actions that are cheap.
So how does a trader actually crunch those specific variables?
Yeah.
We have the diplomatic pause, the Iranian denial, and the $200 billion request.
So the prior belief, the baseline, is that the conflict continues. Then you feed in the new evidence. The U.S. verbal pause is classified as cheap talk, so the model gives it a low weight.
Because words are cheap.
Exactly. Then Iran's denial confirms the unreliability of that diplomatic track. But the $200 billion Pentagon request, that requires congressional approval, massive bureaucratic mobilization, and real capital.
So it's very costly to fake.
Incredibly costly. So the model overwhelmingly favors the hard financial data over the political rhetoric.
And what are the final probabilities when the model finishes updating?
The probability of what the analysis calls scenario B, stagflationary stress, which means prolonged conflict, high energy prices, and disrupted trade, sits at a dominant 49%.
Wow.
And the probability of scenario A, the new normal, which involves limited contained conflict and intermittent negotiation, is only 36%.
So the math practically proves the pause was just a tactical breather for domestic political reasons. It wasn't a strategic pivot toward peace.
Yeah.
So if the math tells us we are locked into a prolonged conflict, we have to look at the physical reality of where this is being fought. The Strait of Hormuz, I mean, it is the most critical oil choke point on the planet.
Oh, without a doubt.
And the prevailing public assumption is that the strait is entirely shut down right now. But this report shatters what it calls the myth of total closure.
And this changes the entire strategic calculus. The strait is not closed. Not entirely.
How so?
Legally and functionally, Iran established a maritime doctrine that allows what they deem non-hostile vessels to pass, provided they coordinate with Iranian naval authorities.
And by non-hostile, they essentially mean politically neutral ships, and more specifically, Chinese-linked tankers.
That's the mechanism, yeah.
Wow.
So you end up with what is essentially a geopolitically discriminated supply shock.
A geopolitically discriminated supply shock.
Right. Western-affiliated traffic is constrained or blocked entirely, which drops overall global supply and causes prices to surge.
So the West is paying a massive structural energy tax.
Exactly. But because Chinese ships are cleared for transit, China continues to receive physical oil flows.
Wait, so a global supply shock isn't actually global. If I'm understanding this right, China gets the oil to keep their factories running, and they get a front row seat to watch U.S. military tech in action.
Yes, that is the asymmetrical disruption at play. China gets a relative economic cushion while the West absorbs the inflation.
That's wild.
But the advantage isn't just economic, it's deeply military. Every single day this conflict drags on, the Gulf serves as a live-fire laboratory for China.
The report actually calls it an operational intelligence harvest. They're gathering permanent empirical data on how U.S. fifth-generation stealth aircraft perform when evading Iranian YLC-8B radar systems.
Right.
Now, for those not deep into military tech, why is that specific radar system so important?
Well, stealth technology doesn't make an aircraft invisible, right? It minimizes its radar cross-section against specific frequencies. The YLC-8B is a Chinese-designed anti-stealth radar operating on UHF bands that are specifically engineered to detect aircraft like the F-35 or F-22.
Oh, wow.
So China is watching active U.S. fifth-generation fighters operate against their own advanced radar tech in a real combat environment, not just a simulation.
They are watching our best jets try to evade their best radar, and they are recording every second of it.
Exactly. If we connect this to the bigger picture, this operational intelligence is priceless.
I bet.
And they are also measuring Western logistical elasticity, literally timing how fast the U.S. depletes its munitions and how long it takes to restock them across an ocean.
Which is data you just can't get in peacetime.
Totally unobtainable. And it is directly applicable to China's own future strategic planning. Think about any potential Taiwan contingency scenarios. Right?
Yeah, that's terrifying. But wait, the U.S. military obviously knows this intelligence gathering is happening. They know the Chinese tankers are moving through the strait. Why doesn't Washington just blockade the Chinese ships to enforce a total closure and stop this asymmetrical advantage?
Because of the domestic tether we discussed earlier.
Oh, right, the gas prices.
Exactly. The U.S. exhibits tacit tolerance for these Chinese oil flows because the alternative is actually worse for them politically. If the U.S. actively blocked those Chinese vessels, it would remove millions of barrels of oil from the global market entirely.
Which would make oil prices explode even further.
Right, which immediately crosses the administration's market-sensitive constraint threshold, spiking gas prices in the U.S. and tanking the economy.
So the U.S. is essentially forced to turn a blind eye to China getting the oil just to keep American gas prices from destroying the administration politically.
That's the reality.
That hands China an unbelievable amount of non-kinetic strategic leverage.
It does. I mean, they are reaping the operational and economic benefits of the conflict without firing a single shot. But they aren't just reacting to the present conflict, they are already executing a blueprint to win the peace.
Yeah, let's look at that post-war horizon, because the economic groundwork being laid right now in the middle of active hostilities is designed to completely reshape the region. And the cornerstone of this strategy is the 2021 25-year comprehensive strategic partnership between Iran and China.
It's a monumental agreement. They pledged up to $400 billion in Chinese investment across Iranian energy, infrastructure, and industrial modernization.
$400 billion.
Yeah. And before the war, implementation was slow. But right now, because Chinese firms are the only ones still operating, still importing oil, and still generating revenue streams in Iran during the conflict.
Because everyone else had to pull out.
Exactly. Because of that, they're actively pre-positioning capital and materials for post-war reconstruction.
So they have a massive head start on everyone else. The report actually highlights a specific plan to rebuild the INSTC, the India-Iran-China multimodal trade route. It will become the primary artery for Iranian reconstruction. But they aren't just, pouring concrete and laying asphalt. They plan to integrate Chinese technology deep into the core functions of the Iranian state.
The term for this is technological annexation.
Technological annexation.
Yeah. Chinese infrastructure and telecom giants will be the ones rebuilding Iran's shattered power grids and port facilities. And as they rebuild, they will integrate the Beidou navigation system.
Which is China's alternative to GPS, right?
Exactly. Along with autonomous monitoring and Chinese industrial control networks.
So what does this all mean? If the West is focused purely on the kinetic warfare, pouring billions into tracking missile trajectories and tactical strikes, are they completely missing an economic takeover happening in plain sight?
This raises an important question, and it is the central critique of the entire analysis. Western strategic models systematically underweight these non-kinetic advantages.
Because we focus on the explosions.
Right. We tend to measure victory by who controls the airspace or who destroys the most hardware. But even if Iran eventually loses its military capacity in this war, China achieves a massive structural advantage.
Because China can frame their entire involvement as humanitarian investment and civilian reconstruction, while in reality they're creating deep, irreversible technological and economic dependence.
Exactly. By maintaining their energy imports during the war and executing a rapid reconstruction afterward, China consolidates soft power, they entrench their economic systems, and they signal to the rest of the global South that they are a reliable, stable alternative to Western-led frameworks.
Especially in conflict zones.
Precisely.
Bringing this all together, the overarching takeaway from this deep dive is that the world has fully entered a phase of stagflationary stress.
Right.
And it is vital to understand that this isn't just high-level geopolitical theory debated in Washington or Beijing. This impacts you directly.
Yeah, that geopolitically discriminated supply shock we discussed, that creates a persistent structural energy premium.
Meaning everything costs more.
Exactly. Higher baseline costs for manufacturing, higher costs for global shipping, and ultimately higher inflation that hits consumer prices at your local store. The macro-financial regime shift fundamentally alters your own macroeconomic stability.
Which leaves us with a profound final thought to ponder.
Yeah.
If we look at the trajectory of this entire conflict, the true victor might not be the side with the most advanced stealth fighters or the most destructive missiles.
Right.
If a global conflict's true victor is the nation that never fired a single shot, merely by keeping its cargo ships moving through a selective choke point and keeping its radar systems watching the chaos, how does that redefine what it actually means to win a war in the 21st century?
It's a great question. It suggests the future of global power might be less about physically destroying your enemy and more about economically and technologically outmaneuvering them while they are entirely consumed by the fight.
It's an incredible shift in perspective. It reminds you that you can't just spin global power dynamics on a dime, But if you are patient enough and you understand the underlying mathematics of the chaos, you can absolutely use the momentum of the conflict to quietly chart your own course while everyone else is busy bracing for impact. Thank you for joining us on this deep dive.
Thank you for listening.